Morning and good afternoon, and welcome to the July 2022 DTN WASDE webinar. My name is Stephanie Carpenter at DTN, your moderator, and with me today is Todd Hultman, Lead Market Analyst for DTN. During this event, all participants will be in a listen-only mode. You may ask questions at any time during the event. To do this, click the Q&A section located on the bottom right of your screen. This will open the Q&A panel. Next, type your question in the box at the bottom and click the Send button. We encourage you to ask questions at any time during the presentation. Your questions will not be viewable by other attendees and will be addressed during Q&A at the end of the session. Also, this event is being recorded and a rebroadcast link will be on your DTN website within 48 hours. Our web address is dtn.com. We're ready to begin the webinar, so I'll turn it over to Todd.
Thank you, Stephanie. Thank you, everybody. Welcome to our July WASDE report webinar. We'll take a look at what USDA's new estimates were for this month. As you know, it's been quite a volatile summer of trading, and I can tell you at the outset that grain prices are sharply lower here again on Tuesday, and in fact, they were sharply lower even before the WASDE report came out. So my hope was that we'd get some break from all this outside market concerns that have been weighing on the markets and get traders' attention on the fundamentals a little bit. But here again, we're seeing that outside market influence really weighing hard on our crop prices. So with that in mind, let's go ahead and take a look at what USDA said for the month of July. And I should say at the front that usually the July estimates don't show a lot of changes. We're not deep enough into the season yet to have strong opinions on yield or clues or evidence of yield direction just yet. But of course, we have had weather features going on, and we've had the weekly crop ratings from USDA give us some guidance on that. So let's go ahead and dive in, and we'll start by looking at the corn figures. This is the U.S. balance sheet for corn. In the far right column are the new crop estimates just released today for the month of July. And before I get to that, I want to direct your attention to the second column. And at the bottom rectangle, you'll see a new ending stocks estimate for corn of 1.51 billion bushels. That's up 25 million bushels from where it was a month ago. And the only change that resulted in that increase in ending stocks was that there was a 25 million bushel reduction in the estimate of feed use. That's where the red arrow is, showing 5.6 billion bushels of feed use. So just that was the only change. There was no change in the export estimate, which was curious to me, as corn export sales are lagging the estimated trend. So there's room for a possible cut to exports in the future, but not today. Now moving our attention to the July estimates, the far right column. The first red arrow at the top, we see USDA's new crop production estimate for this year, 2022, coming in at 14.505 billion bushels. And of course, that's largely a result of the acreage estimate we got on June 30th. And at the top, you do see 89.9 million acres of corn plantings. That's USDA's estimate there. USDA stayed with its record yield estimate of 177 bushels an acre. And that's no surprise there. We don't often see a change in the month of July. We will start to get more weather input in August, and the September WASDE report is famous for having the first field observations. So we have more yield information still in front of us. Those were basically the only two changes to the report, that production estimate and the old crop feed demand. So we can go ahead and slide down to the very bottom of the last far right column and see that the new crop ending stocks estimate for the new season is 1.47 billion bushels. That was slightly higher than expected, and it's up 70 million bushels from where it was last month. The new average farm price estimate from USDA for the new crop season is $6.65. I'm going to go ahead and turn now to the world estimates, and this first table is for the current season we're in. And the reason we look at that is because Brazil is still in the process of harvesting its second corn crop, and that is happening in this particular season. I guess let's start in the upper right corner where the arrow is, and we'll see that USDA's ending stocks estimate for corn in this season is 312.3 million metric tons. As a world estimate, that's up just over 1 million metric tons from what they estimated a month ago, so not a big change. Now, if we look at Argentina and Brazil's estimates in the second column, we see that neither crop estimate for their corn was changed this month. So Brazil stayed at 116, Argentina stayed at 53 million metric tons. If we look in the third column down at the bottom, we see the rectangle around the numbers. Those are the import estimates for Canada and China. In Canada, it's noted that the import estimate on corn increased from 3.8 to 5.4 million metric tons. We have seen aggressive imports from Canada over the winter as they needed feed for their cattle, and so that's not a surprise, I don't think, to see that increase. The China's corn estimate, 23 million metric tons, was unchanged from last month, so no change in the China number. And then lastly, on the second to the right column on the line for Ukraine, that is the export estimate at 24 million metric tons. That's up 1 million metric tons from last month's estimate. So USDA giving credit to Ukraine's efforts to get some of their corn shipped out of the country there, increasing that export estimate to 24 million metric tons. But overall, not a big change on this old crop sheet of world estimates. Now let's turn to the new crop sheet. These are the world estimates for the season in front of us. And you can see in the upper right corner that world ending corn stocks estimate was increased from roughly 310 to almost 313 million metric tons. This was largely the result of lower demand. That's the other rectangle you see to the left. We see a drop of about 1.6 million metric tons in USDA's demand estimate. The long rectangle at the bottom is for Ukraine, and there we see that USDA did not change the corn production estimate for Ukraine. It's still 25 million metric tons, and they did not change the export estimate for Ukraine. That is still 9 million metric tons, the second column from the right there. So no change in the Ukraine corn estimates. And then lastly, I just wanted to point out that Russia's corn crop estimate was reduced by 1 million metric tons in this report. It went from 15.5 to 14.5. So with the slight increase in the old crop estimates plus a reduction in world demand, we come up with a slightly higher ending stocks total for corn of almost 313 million metric tons. Again, not a big change. Slightly bearish maybe for the price, but not a big change. I like to show this running chart of world ending corn stocks excluding China. As you probably know, USDA estimates roughly 8 billion bushels of ending corn stocks in China, which simply just doesn't seem reasonable at all, where China has become a big importer now for the second year in a row. And has much more expensive corn prices than we do. So it's not likely that they're holding 8 billion bushels of corn surplus. So if we look at the world ending stocks apart from China, we see that USDA's new estimate in today's report is 4.28 billion bushels total for the world outside of China. And that's up slightly from the previous 2 years. Not as high as the surplus years we saw around 2016 and 17, but a bit of a rebound from the previous 2 years. Now, keep in mind, obviously, the world's largest corn producer, the U.S., still has a very young crop in the ground and has a lot of crop risk still in front of us. So this is certainly not set in stone. The history of U.S. cash corn prices, this is just a good fundamental metric I like to point out to keep track of where prices are in terms of where they typically trade historically. And in previous times, I should say that the ending stocks to use ratio in today's report is 10.1% for new crop ending corn stocks. That's what that 1.47 billion bushels of ending stocks translates to. It's just roughly 10% of annual use. if we look at previous years when USDA was estimating a 10% ending stocks to use ratio, that's signified by the blue cash corn prices on the chart. If we look up from the red arrow, which is placed at roughly the 10% mark, we see that historically when USDA estimated price supplies at this level, that cash corn prices traded roughly at $5.40 a bushel. Now, there's a wide range of blue dots on that chart, which tells you that the market is a very volatile, emotional type of creature, and that's certainly been true this year. We've seen prices trade a lot higher than $5.40, and of course, they're still above $5.40 at this point. DTN's current national cash average for corn, $7.26 last night, and getting beat up again today, down 45 cents at the moment on December corn. So we're still well above the historical target of $5.40, but obviously down from the highs of a month or two ago. Corn shipments. As I mentioned, there was no change to the export sales number in corn today, but this shows the pace of shipments this year. The red line is the current pace of corn shipments. The green shaded area is last year's record shipment pace, and the black line is the 4-year average. So our shipment pace is above the 4-year average, not quite as much, obviously, as last year's record pace. Total sales at this time are down 13% from a year ago, and that is the bit of a problem here, holding shipments back. So USDA is looking for an 11% decline in exports, but our sales are down 13% from a year ago. We just have roughly 2 months left in the season, so that's why I say corn is at risk of having its export estimate reduced by a modest amount. China's purchases. This chart is the chart of corn prices on China's Dalian exchange. The most active contract is currently September corn. It closed at $10.30 a bushel earlier here on Tuesday. As you can see on the chart, much like U.S. corn prices, Chinese corn prices have fallen off from their highs of a couple months ago. And I think it's fair to say that with Brazil looking to harvest a record crop, we noted USDA's estimate of 116 million metric tons, that China's, I think, anticipating that crop, and it looks like their prices have come down in anticipation of that. So far this year, China has purchased 580 million bushels of U.S. corn in the current season. That number's been somewhat static for the last few months. A lot of those purchases were made earlier in the year, and we haven't seen much change here lately. And the sales pace for corn has actually dropped off quite a bit now that it looks like Brazil's harvest is going well. So it looks like we're going to have a few months of corn competition in front of us as far as exports go, with Brazil providing some competition there. How about the basis? Well, it's not as strong as it was a couple months ago, and I can tell you that our DTN corn index last night, I think I mentioned earlier, $7.26. That's down 55 cents from where it was a month ago. The cash basis has rolled now. Instead of trading off the July, we're trading off the September contract, and the basis is currently 89 cents above the September contract. That's still the strongest cash basis in 9 years, even though cash prices have come down roughly a half a buck. Just as we look at this map of cash corn bids across the country, I'm still fairly impressed that we see bids largely in the mid-sevens or in the $7 range anyway, spread throughout much of the country. When you get to South Dakota and the cash bid drops below 7, but you get to the Texas Panhandle and it's still quite expensive down there in the $8 category. So overall, though, the corn bids are spread out throughout the country fairly evenly, at least compared to how it normally goes. Corn demand. We always look at the future spread as a sign of commercial demand, and this year I think we have to make a special note about that. If you look at the upper half of this chart, there's the July-September corn spread, and you can see July has an enormous premium over the price of the September corn contract. Well, there's two things at work here. One is that the commercial demand for limited supplies of July corn is so strong, and those supplies are so tight that it's a very strong old crop demand situation right now for July corn. And the July contract expires here on Thursday, so it's just got 2 days left. There's been no deliveries yet, and we see this enormous premium in the July price over September. However, it does not necessarily mean that that demand is going to translate to the corn market after this contract expires. And I say that because as we look at the September corn chart on the lower half here, we see falling September corn prices. So this is not the normal bullish situation that we would see from a future spread showing a big front month premium. This is a specific demand peak in the month of July that does not translate moving forward. So that's a bit of the concern. Now, again, there's a lot of crop risk still at play, so we don't really know yet the size of what the corn crop is going to be in the fall. But I would say the anticipation of Brazil's crop plus the anticipation of harvest is somewhat normal for this time of year, but should not be misinterpreted as a strong sign of demand moving forward because we don't see evidence of that yet. The speculative positions in corn, as you can see, they've been coming gradually lower the past couple months, and in the past couple weeks, they had a couple of pretty sharp drops. So right now, non-commercial net longs, non-commercials being speculators in the market, those net long positions are over 260,000. That is down 40% from early May, not that long ago. And the selling has largely been a result of outside market fears. You know, everywhere we go, we're hearing about high gasoline prices, inflation, rising interest rates, the Fed having to raise interest rates more, and now more and more we're hearing about concerns about, oh, are we headed for recession? So all that talk has spooked a lot of the speculators out of not only corn, but soybeans and wheat as well. We'll see when we get to those charts. And it's really had a severe bearish impact on our grain prices here early in the summer. Soybeans. Okay, let's take a look at the U.S. balance sheet for soybeans. And again, we'll start in the second column from the left. That's the old crop estimates. And we see one change on that balance sheet. The crush estimate for soybeans was reduced by 10 million bushels, and because of that, our ending stocks estimate at the bottom increased. Instead of 205, now it's 215 million bushels. So that was it for the old crop change, just a 10 million bushel increase, and it's still less than 5% ending stocks to use ratio. So it's still a very tight situation historically for soybeans. As we look at the right column now, that is the new crop season, the soybeans that are in the field, and we see that the crop estimate is reduced. And if you recall, the June 30th planting estimate came in lower than expected, so we see that 88.3 million acres of plantings at the top. USDA kept its yield at 51.5 for now. It'll include weather information in that yield estimate later, but for today they're staying at 51.5. And so we get a lower production estimate, 4.505 billion bushels. That's down 135 million bushels from last month's estimate. There were two demand changes as we look lower down, pointed by the two red arrows that are next to each other. The top change, the crush estimate, was reduced 10 million bushels also in the new season to 2.245 billion bushels. And the export estimate for the new crop season was reduced by 65 million bushels to 2.135 billion bushels. And I think it's fair to say that that new crop reduction in the export total is related to concerns about China and China's economy, and perhaps just the world economy and demand for soybeans overall. So we get down to the bottom of the ledger, and we see a new ending stocks estimate of 230 million bushels for soybeans. Because of the lower production estimate, that's 50 million bushels lower than USDA was estimating last month. But even though we have a tighter supply situation estimated, USDA's average farm price was reduced from $14.70 to $14.40. And of course, they're seeing the outside market influences and probably taking something of that into an account here. Let's turn now to the old crop world numbers for soybeans. And in the upper right corner where the red arrow is, we see soybean stocks estimate from USDA, 88.7 million metric tons. That's not much of a change from the previous year. Let's see, that's up 2.6 million metric tons from the previous year, sorry. If we look in the second column, Argentina and Brazil's crop estimates, we see that Brazil's crop estimate was unchanged at 126. Argentina's soybean crop estimate was increased slightly from 43.4 up to 44.0 million metric tons, so just a fractional increase in Argentina. If you see where I have the rectangle around the number 90, that is China's soybean import estimate. That was actually dropped by 2 million metric tons. So again, it looks like they're taking into an account some reduced demand from China there. And then lastly, I don't have it circled, sorry, but there is a 1.5 million metric ton reduction in the overall demand estimate for soybeans in the current season. So add it all up, we have about a 2.6 million metric ton increase in the current season. Before we leave this page, I want to just turn your attention to the right, the margin on the right, and that is USDA's ending stocks estimates for the local marketing years of Brazil and Argentina. So when we get to January 31 of 2023, USDA estimates Brazil will have 87 million bushels of ending soybean stocks available, which is obviously a very small number. And Argentina's ending stocks estimate for their local season is 232 million bushels. So fairly low ending stocks around. When you consider the U.S., Brazil, and Argentina are the main soybean producers of the world, the three of us don't have a lot of surplus in these estimates that you see today. USDA's world soybean estimates now for the new crop season. That's for the crop that's currently in the ground. In the upper right corner, we see the new ending stocks estimate reduced slightly from 100.5 to 99.6 million metric tons, so a slight decrease. The estimates for Argentina and Brazil stayed the same. Brazil's still at 149, Argentina's at 51. Keep in mind those crops are still months away from even being planted. So as far as South America goes, these are very, very early estimates. The only thing perhaps noteworthy is in the line for China, we see a 1 million metric ton reduction in the import estimate for soybeans. Instead of 99, USDA says they will import 98 million metric tons. So we continue to see a little reduction in the demand estimates for China affecting these totals today. The history of cash soybean prices, well, the new crop season, we're at a 5% ending stocks to use ratio. If we look historically, what did prices trade at? The range of trades go anywhere from $10 to roughly $20 a bushel, but the statistical center of that 5% ending stocks to use ratio has zeroed in right around $13.20. And those prices are indexed for inflation, by the way. of course, because this is a 25-year study, so we have to index those prices for inflation. But it gives us just a general guideline of what we could normally fundamentally expect from this type of a situation. Now, the current DTN soybean index is at $15.35, so we're still roughly a couple bucks above that, but I hate to tell you, November soybeans are trading down 57 cents today with that lower crude oil price. So we're coming back toward more of the historic trend. Soybean export estimate, again, was not unchanged today for the old crop soybeans. It's still 2.17 billion bushels. That surprised me a bit because currently we have a lagging pace of soybean shipments. And as I mentioned, we only have 2 months left in the season. So far, soybean shipments are down 11% from a year ago. USDA is estimating a 4% decline from a year ago. Now, last year, that green space that you see on the chart, the green area, was a record large export year that we had for soybeans, largely powered by China. So there's no shape to being down 11% from a year ago necessarily because that was such a big year. We're still well above the 4-year average, but we're nowhere near close to a pace for a 4% decline. So it's possible that we have 50 to 100 million bushel reduction coming in that export estimate, which would make those ending stocks a little more roomy than the 215 that we see today. China's soybean demand, this is on the top, we have the most active soybean prices from China's Dalian exchange. The lower chart is soybean meal. As you can see, also similar to U.S. prices, they've had quite a correction here the past few weeks, especially in the soybean price itself. So we always look for that for clues as to how's China's demand going, and with the concerns about rising COVID cases and perhaps their economy slowing, we have to take it a little bit seriously when we also see the soybean price coming down. This morning, September soybeans were going for $18.99 a bushel if you translated them into the U.S. Currency. So there has been quite a drop-off from the record highs we saw earlier this year. So far to date, China's bought over 1.1 billion bushels of soybeans from the U.S., but like corn, that pace has really slowed here the past few weeks. How about the soybean basis? Now, we've seen quite a hit to the cash soybean prices in the past month. In fact, that soybean price, $15.35 as of last night, is down $1.84 from when we talked about this a month ago. The cash basis is currently 13 cents above August, which is still, historically speaking, an impressive basis. It's still a sign of good active demand. It is the second strongest in 8 years. But to see cash prices come down so sharply in such a short time has been a bit unnerving for the market. If you notice here on the soybean bids that I show on the map here, obviously the best bids we're seeing in the $16 range are around Illinois and Indiana. They're locations near the Mississippi River, which is kind of the traditional pattern of things. And then when you get farther away, when you get to the western areas of the soybean region, you start to see prices under $15. So this has a little more traditional distribution to it. Whereas if you recall in corn, the bids were spread out much more evenly across. Just kind of a sign of the demand centers, I think, for the two different crops. In July soybeans, we look at the spread once again as a sign of commercial demand, and we have a similar situation to what I showed you previously in corn. We have July soybeans trading $1.09 above the August contract, which is an incredible premium for a contract month that's only 1 month away. So to think that, commercials are willing to pay $1 a bushel more to get soybeans in July as opposed to just waiting another month. Seems kind of crazy, but that's where the demand peak is. If you noticed on the August soybean chart at the lower half of this chart, the August soybean prices have broken support and have turned lower. Now it's been choppy and it's been volatile, but overall, you don't see the same demand interest for the August soybeans that you do for July right here. So I think it's fair to suspect that this demand peak is probably going to end with the July contract, and we'll have to just go from there. But once again, we can't just assume that strong demand in July is going to magically show up in August once July's gone. That is not necessarily the case. The U.S. soybean crush actually is still holding up quite well, given the volatility and the speculative selling we've seen in the soybean market and throughout the entire soy complex. The crush value is actually holding up fairly well. Based on August futures, the combined value of meal and oil is $17.67. This was a snapshot of the chart as of last night. And that leaves a crush premium of $2.38. So historically speaking, there's still a wide and healthy difference to encourage crush activity. But as you saw in USDA's report today, they did reduce the estimates by 10 million bushels in both the old crop and new crop season for crush activity. So I think that probably does reflect the narrower spread that we have here, but it is still a healthy sign of the demand we have domestically. The speculative positions for soybeans, like corn, they've been gradually dropping over the past couple months, and in the past couple weeks had a couple of pretty sharp drops. The specs are now net long over 125,000 contracts. That's down 38% from where they were in late April. And again, that's coincided with a lot of the speculative selling related to outside market concerns of higher interest rates, talk of recession. And in the case of soybeans, you have to add to it the concerns about COVID in China specifically. China, obviously being the world's largest buyer of soybeans, soybean traders are especially sensitive to any news out of China. So that's all coincided. There is possible support at $14. We'll see. But obviously, this market still has a lot of crop risk ahead. A lot of the soybeans we see just don't look very good, to be honest, for this time of year. It looks like that kind of wet, cold, early start was not great for soybeans in a lot of areas, and we'll just have to see how this crop turns out and if they can still meet that 51.5 bushel an acre yield that USDA has posted. Okay, now we get to the wheat part of the USDA report today here on July, and there's not much change here. In the second column at the bottom, the rectangle, you see the new ending stocks estimate, 660 million bushels. Well, we knew that was going to happen because the June 30th grain stocks report told us that there were 660 million bushels at the end of the season. That's just up 5 million bushels from where it was last month. And to justify it, USDA reduced the seed estimate by 4 million bushels. So it was not a big change, and no surprise there on the old crop side. On the new crop side, we have a new, somewhat higher production estimate. 1.781 billion bushels is shown by the red arrow there is the new production estimate for this year in wheat. That's the all wheat production. That's up 44 million bushels from last month's estimate. We had some minor changes to demand tweaks. I won't necessarily name all of them, but we did see a 25 million bushel increase in the export estimate of new crop exports. Instead of 775, now USDA estimates 800 million bushels of exports. We'll see if that can be achieved or not. And then anyway, we get to the bottom. The new ending stocks estimate, 639 million bushels. That's up 12 million bushels from last month's estimate and is very close to expectations. So no big shakeup in the U.S. estimates here as expected. The NASS had a crop production report today, and they showed breakdowns of the production estimates. I won't go through them all here. I'll just say at the top, winter wheat estimate 1.2 billion bushels, down 77 from a year ago. Hard red winter wheat came in at 585 million bushels. That was slightly higher than, that was roughly as expected. Soft red at 376 was slightly higher than expected. White winter at 240 was close to expectations. Other spring wheat came in a little more than expected at 503 million bushels. The trade was looking for 449. So if there's a surprise on this list, it's probably the other spring wheat. And of course, if you saw the crop progress report yesterday, you know that spring wheat conditions were improved to 70% good to excellent for the crop rating on spring wheat, as they've benefited from some recent rains in North Dakota and Montana. In the new crop wheat supplies, I just wanted to point out this is the first estimate of ending stocks for the wheat classes in the new season. And if you look up from the arrow, you see a July ending stocks estimate of 265 million bushels for hard red winter wheat. That's down roughly 90 million bushels from last year, from the season that just ended at the end of May. So we're going to have tighter stocks of hard red winter wheat. We're going to have a little bit tighter stocks of hard red spring wheat, according to USDA's estimate, 126 million bushels. And we're going to have a little more soft red winter wheat at 136. So tighter hard red, a little more soft red. Or in futures terms, tighter supplies of Kansas City wheat, more supplies of Chicago wheat. Now, on the world estimates for wheat today, we had very small changes. The upper right corner, we see the ending stocks estimate was just increased slightly from 266.8 up to 267.5, so just a fractional increase, not even a full million metric tons on the ending stocks estimate there. The crop estimates were somewhat interesting. In the second column, I didn't include it in the rectangle, but Argentina's crop estimate came down 500,000 metric tons. They've been suffering dry weather. Canada's crop estimate was increased 1 million metric tons. They've benefited from recent rains. Europe's crop estimate down 2 million metric tons. They've had dry weather in Western Europe and a heat wave recently. Russia's crop estimate only increased 500,000 metric tons. That's a bit surprising. A lot of private crop estimates are putting Russia's wheat crop in the upper 80s, but USDA, sticking with its guns here largely, saying 81.5 million metric tons. And in Ukraine, the wheat crop estimate was reduced from 21.5 to 19.5. Obviously, that farmers in that country dealing with incredibly difficult situations, really fighting for their survival and trying to grow and harvest a wheat crop at the same time. It was interesting, I thought, if you look to the rectangle to the right, that USDA did not change their wheat export estimates for either Russia or Ukraine. Russia staying at 40, Ukraine staying at 10 million metric tons. That's roughly 40% of Ukraine's export level before the war began. So continues to be a very difficult situation, not only to assess, but obviously a difficult situation in human terms. A lot of, I can't understate the risk and the potential for surprise ahead in that part of the world. World wheat supplies overall did not change much in this report. The ending stocks estimates from USDA for the world's top 8 wheat exporters is 2.01 billion bushels. It was just up a tiny amount from last month. It's still the lowest world wheat supplies in 9 years, and that has not changed, even though wheat prices have dropped several dollars in the past couple months. This really has not changed fundamentally the outlook for wheat. And we, again, as I say, we still have significant risk in the Black Sea region, and it's very difficult to predict just what's going to happen there. Cash wheat prices, if we look at today's ending stocks estimate for U.S. wheat of 639 million bushels. It comes out to roughly 33% of annual use. If we look above the red arrow and see the place on the statistical center of all the previous cash wheat prices that have traded, we're looking for a statistical target of roughly $6.10 is where we would say wheat normally trades when supplies are at this level, 33% of annual use. Now, last night's HRW wheat index closed at $8.65, so it's still $2.50 above that, and September Kansas City wheat is down 44 cents as we speak. So some of that fear premium continues to come off, and of course it's being replaced by other fears we have about a rising dollar and slowing world economies. But keep in mind, wheat demand does not largely respond to economic changes. Wheat demand largely is a function of population growth. And the people of the world that eat wheat don't do it as a luxury item. They eat it because they need it, and that doesn't change much from year to year. The weaker basis for HRW wheat, we're seeing the basis for the HRW wheat index that DTN keeps as a national average. As I said, it closed at 865 last night. That's down $2.39 from where it was when we talked about this a month ago. So we've seen a very sharp drop in wheat prices in a very short time. The cash basis continues to be roughly 50 cents below the September contract. That's about the weakest it's been in 5 years. So no great shakes for demand on wheat yet, even though we've seen a big drop in the cash prices. The speculative positions in Kansas City wheat, similar to what we saw in corn and soybeans, except I'd say they've sold off even harder. The non-commercial net longs positions are now under 18,000 contracts. That's down over half of what they were on May 9th. So they've had a big sharp sell-off. Several dollars of wheat have come off there. And again, the fundamentals as far as world wheat supplies really hasn't changed that much, but it's largely been a lot of fears about outside market concerns. And obviously a big speculative influence that had built up in all of our crop prices. Before I get to the summary, I just wanted to point out what's happening today. Why are the grain prices down so sharply today? We've got corn down 42, beans down 61. Well, a lot of it, once again, it's outside market concerns. And here was the August crude oil chart snapshot that I took earlier this morning. It was trading down $7 at the time. Crude's, well, it's down $8 now as we speak. So it's fallen below the 100-day average. It's also falling below the $100 per barrel mark. Now, that's not so bad for our pocketbooks. We can all say a bit of a cheer for that. Will it last? Remains to be seen. We still have a very tight situation as far as world and U.S. oil supplies, and our productive ability just has not rebounded from where it was yet before the pandemic. So we still have a lot of work to do. And of course, the Ukraine war with Russia is also a big interference in world oil production and how this all plays out. So it is adding fears to the market, and we're seeing that again here today. Lastly, in conclusion, I would say overall, today's report was neutral for soybeans and wheat, slightly bearish for corn. And I only say slightly bearish because the ending stocks estimates for U.S. and world corn were slightly higher than expected, but I would not say they were big shocks to the market. For both corn and soybeans and spring wheat, we have plenty of crop risk ahead. We still have important weather features ahead of us, and of course, as you probably know, the forecast is largely dry for the next 2 weeks in front of us, and we'll see what it's like for August when it comes soybean time. So we still have plenty of risk in the market in either direction. We knew this was going to be a volatile summer. Obviously, we didn't know it would be all downhill the way it's been so far. So Stephanie, this is a great time. If you have any questions, I'll do my best.
Yeah, we have one question, and that is, when do you think we can start seeing actual correct numbers out of Ukraine, i.e. planting, exporting, etc.? The trade has talked about how far off these numbers USDA are using.
Yeah, actual correct numbers out of Ukraine, not this year, probably not next year. You know, if you're waiting for fundamental uncertainty out of Ukraine, I just don't think it's going to happen. Sorry to say, it's too chaotic of a situation. We have a hard time getting fundamental, accurate, correct numbers out of the United States during times of peace. So, we have to take all the numbers we hear out of Ukraine and Russia and China with a big grain of salt, and we try to corroborate that with all our other market clues and everything else that's going on. But for most of the world, this is a guessing game, especially in this situation, and it's very difficult. You don't have people going door to door in Ukraine and taking surveys. It's just not that kind of a situation you can do that in right now. So I don't mean to be cynical, but I just have to keep it real. So thank you for that question.
Great. That was the only question we had today. So I'd just like to thank everyone for joining the conference. As a reminder, today's event has been recorded and the rebroadcast link will be up on dtn.com within about 48 hours. If you have any additional questions or like more information regarding our topic today, our contact information is listed on the screen. This concludes our event. Thank you all for joining and have a great rest of the day.
Thank you, everybody.